I'm Kenneth Ong, Fund Manager of Singapore Equities at Lion Global Investors. I'm here to share our outlook for the Singapore market. The Singapore equity market could possibly be at a once-in-a-decade positive inflection point. While Singapore equities have underperformed global equities for the past 10 years, we are now at a low level not seen since the Asian financial crisis, where we look back at the relative performance of the Singapore market to global equities over the past 30 years. We could start to see the bottoming of this underperformance, since corporate balance sheets now are in far better shape than in 1998. Indeed, Singapore equities have the potential to begin to outperform global equities over the next decade due to three major shifts that are emerging. Firstly, from a global macroeconomic perspective, we could be making a shift in monetary regime from quantitative easing to one of sustained global stimulus investment into green energy infrastructure over the next decade. This can drive global rotation from growth stocks towards value stocks. Since the Singapore market is a value-driven market, with many companies plugged into the global industrial and commodity supply chain, a global rotation to value would be a major driver for Singapore equities. The second shift is how the cycle of technological diffusion can benefit companies in Singapore. There are two categories of companies that can benefit, what we term the blue chips and the survivors. During the pandemic, many blue chip companies in Singapore had experienced significant declines in their share prices. We believe that the former blue chip companies have now become attractively cheap, hence the term blue chips. The potential is for these blue chips to apply big data and artificial intelligence to enable them to improve productivity and create new use cases in areas such as smart cities, renewables, and logistics. Secondly, further down the chain, many small and medium enterprises have suffered from low growth over the past decade, and some have closed down. Those who survive, whom we term the survivors, are now adopting new technology to pursue new growth in areas such as semiconductor and robotics. So together, the technology can diffuse from consumers-focused tech companies like Google, Tencent, or Amazon to business-to-business focused industrial and real economy companies like the blue chips and survivors in Singapore. The third global shift is the search for financial safe havens in an increasingly polarised world. As the preeminent British rule of law jurisdiction in Asia, Singapore continues to attract financial flows from the growing Asian region. Our banking sector, a bedrock of the Singapore equity market, is poised to be even more well-positioned to attract continuing flows into the wealth management and real estate sectors amidst geopolitical uncertainty. As a AAA rated jurisdiction with one of the highest dividends amongst developed markets, the Singapore market is well-positioned as a high-yielding market with the optionality of growth, backed by the major shifts in the rotation to value, technology diffusion into the blue chips and survivors, as well as Singapore's attractiveness as a financial hub. I'm Kenneth Ong from Lion Global Investors. Thank you for your time.